Thank you, Jason, and good morning, everyone. Thank you very much for taking time out of your busy day today to hear all about Keysight. We're going to get a chance to talk about the strategy that we have for creating value, the actions we've taken so far, and the results that we've delivered. But on top of that, we're also going to talk about the future, talk about our exciting growth opportunities that exist, as well as the fantastic opportunity for value creation. So let's get started. First of all, just to give you a little bit of a background on Keysight, I think most of you are very familiar with this. We are a $4.3 billion revenue company, looking at our statistics from last year. We have a #1 market position in the markets that we play in, and we serve over 32,000 customers a year, as we did last year in 2019. We're a global company where we have employees in 30 different countries, and we serve customers in over 100 different companies. We have a very solid business model and are delivering great value creation. We had 24% operating margin last year, 46% earnings growth, and our free cash flow was over $850 million. That would be great if it was billion. That is for sure. We have a $17.5 billion addressable market, and we have expanded this over time. And of that market is growing 3 to 5%, but we focus on the subsegments that we believe provide the longest term secular growth rates and industries and businesses that can actually grow for at least a decade. Our market share is 25%. We grew at 300 basis points during the last 3 years, and we see more opportunity to take share as we are first to market and we have very differentiated solutions. One of the key strengths of Keysight is our relationship with customers. It's very deep and it's very broad. So first of all, if you look at all of the hardware solutions, we are #1 with the largest share. If you look at software, it is the same situation. And third, if you look at the different industries that we go into, commercial communications, aerospace, defense, electronic, industrial, we are also #1 in all 3 of those segments. The most exciting thing is we have such close customer relationships that when we are developing products, we are not guessing. We are working with the market makers in each of these industries and understanding what their roadmaps are all about, where they're going, and then we arrive first with products with 10 times the performance. And we need that type of performance in order to make the right measurements on their products and ensure that they work. But you can see we have very, very strong penetration and direction partnering with these market leaders. On top of that, you'll see some names here. We couldn't fit all 32,000 names on the slide, but you get an idea of the scale and the scope that Keysight really partakes in the overall electronics industry. If you look at our regional mix, you can see we're a worldwide global company. And the most important part is take a look at where our employees are. We put our employees where our customers are in the same regions. And that way they can work with customers, work with the market makers, understand their needs, and provide solutions. We do R&D all around the world, as well as marketing and as well as sales. So that gives us a nice competitive advantage. We have over 7,000 products and solutions, which is very, very powerful. So when we go into customers, we can put together a solution for them since we have all the pieces to make that happen. Our engineering expertise is second to none. This is not the expertise, this 40,000 person years. This is just the expertise in our engineering community. 40,000 person years of expertise that we bring to bear on our customers' problems. On top of that, we have an installed base of over $30 billion, and that is great news for our growing services business. We didn't focus on it before we spun out of Agilent, but we made that one of our key growth initiatives, and that installed base gives us great opportunity. If you look at the compound annual growth rate over the last 2 years, it was 17%. And if you look at in orders, and if you take a look at our growth rate, even in Q1 that we just announced last week, we also had 17% order growth and 16% revenue growth. We are segmented into two main segments, the Communication Solutions Group and the Electronic Industrial Group that I think you're familiar with. In the Communication Solutions Group, we do everything from focusing on wireless systems as well as wired systems when you look at signals such as 5G and they go from a handheld device into a base station or a cell tower, into the network and into the cloud. We can cover and span that whole solution, and it's important for us to do that with one group that's focused on these customer solutions. Accordingly, we moved Ixia into that group so we could combine wired and wireless solutions, and where the wired and wireless solutions meet, it gives us an opportunity to provide a unique solution since we're the only player that spans the entire ecosystem. On top of that, we have an electronic industrial group that focuses on different markets such as next generation automotive, where that could be electronic vehicles as well as autonomous vehicles, the semiconductor business, IoT, as you may have seen out in the demos, but it's a broader group, but we focus on particular segments that are growing faster and provide great opportunity for us to gain market share and grow faster than the market as we have been doing. What really gets me excited about Keysight is not what we've done in the past, but the fact when we look at our top 6 markets that we have selected very, very carefully, that they all change. There is perpetual change in the technology industry. We've been in this market for 80 years, back from when Dave and Bill started Hewlett-Packard and started the electronic measurement business. And as we started there and grew through that and then went into Agilent and finally spun off, we always see people working on new technology. That is the best thing for our company. As long as we stay first, we are the ones that can capture the work that engineers are doing. Even if somebody's working on 5G, there are engineers that are starting to focus on 6G. We are working with them on the next generation solutions. You're going to hear more about these 6 different industry applications and opportunities throughout the day from our business leaders. You may ask, what's our strategy? To put it at the highest level and to make it simple, we accelerate our customers' success. They are all about innovation, and we do everything to help them innovate faster. And in order for us to do that, we have to provide first-to-market solutions. These first-to-market solutions are extremely critical. When someone's trying to move up the speed of a network, or they're trying to invent a new cloud, or a 5G cell phone, or a base station, they want the first product that's available. We're typically there 2 years before you see a product in the market providing test tools. So that means 4 years before you hear of something coming to market, we have already been working on it. Just to give you an example, we spun off of Agilent in 2014. We decided in 2013 to make the spin. And I remember in September of 2013, when we announced that, myself and others, we made the decision to focus on 5G. So we've been at this for over 6 years, and that's why we're number one with the most market share and seeing such great growth. So we have to be first to market with our solutions. That requires a lot of foresight, working with our market leaders, and it requires the right type of investments. This is an easy thing to say, but let's talk about the 6 steps that are necessary in order to make it happen. First, we have to provide complete solutions. Customers do not just want hardware, which was our roots a long time ago. They want hardware, but they also want software. And I'll give you an example. Oscilloscopes, which make measurements and will measure something, they actually go ahead and digitize your measurements. So they'll take a signal in the world, an electrical voltage, and they'll convert it into numbers that you could essentially put in an Excel table, although we have much more sophisticated tools. You could do that a while ago, but right now, our oscilloscopes make 256 billion precision measurements a second. It is physically impossible to go ahead and analyze these signals without having the software to make the measurement, do the calibration, and do the analysis and provide answers. So customers, such as a cell phone manufacturer or a base station manufacturer, they do not want spreadsheets with a billion numbers in it. What they want is an answer to find out whether or not the product that they're making will work on a 5G network. And accordingly, software has been a focus for us. It's been a growth area, and we've grown that business tremendously. Services are necessary too. When people buy products, they need help configuring a total solution, for supporting a solution, be it for repairs, and for software upgrades. That was another one of our growth initiatives, and we'll get a chance to talk about that also. And they want to do this all throughout the whole design process, the manufacturing of their products, and then the installation and operation of their products. So that is why we acquired Ixia, so we could provide this total solution where they focus on optimizing the network. So a network administrator can look at all the data that's flowing into the cloud and find out why the network is not working. Why is it slowing down? Is it slowing down because your engineering capability is overwhelming your system? Or is it because everybody's watching President Trump on YouTube? And that's the type of thing you could do. You can go into any type of application, understand what's going on, and you can help troubleshoot it. But we provide solutions for this total workflow like nobody else. And we do it in the industries which you're going to hear about this morning. The second part of that is to make sure that we are first and we're first to market. That took a lot of transformation from where we were at spin, and I'd just like to walk through at a brief level what those steps were, and then you'll hear more about this throughout the day. The first thing we had to shift was from hardware-centric products to software-centric solutions, which include many hardware products and lots of software for measurement, for analysis, etc. So that was a big change, and we had to retool our engineering workforce. We have grown our software engineering headcount 83% since we launched the company. The second thing was having different divisions, 15 different divisions that all had parts of a solution. One division could have a spectrum analyzer, one could have an oscilloscope. It doesn't matter what they are, but they have to be brought together and software has to be wrapped around them. So trying to get 15 different general managers to agree to focus on a particular company was very slow. You can't be first to market if you do it that way. So what we did was we went ahead and we turned the organization on its side. And we did the biggest reorganization in over 75 years since Dave and Bill set up the company in our HP days. And we organized around customers. Now Satish, for instance, for communication solutions, or Sunchai for electronic industrial solutions, they have all the assets at their disposal. Sunchai could walk into a customer and say, yes, I can give you that solution based on what you're asking for. He has all the hardware resources. He has the software resources. Some are in a common group that he has all access to, but most of them are in his group. And he has all the different products and solutions. So the decisions can be made on the spot, and they don't have to go back to the company and spend a month debating on it. Again, first to market is what it's all about. We have invested enough to make this happen. We have increased our R&D investment from $355 million to over $700 million this year. We have doubled it. And that is what is providing the revenue growth. The issue isn't the amount we're spending in R&D. The issue is that we are getting the revenue growth that is available to us by being first and investing in those areas. We leverage our technologies. Jay Alexander, our CTO, is going to talk about technology that is made in our Keysight labs. And that is when he develops things that are used by multiple groups or from multiple businesses so we can provide leverage and economies of scale. And of course, none of this makes sense unless you really understand where the markets are and you're providing solutions where there's long-term growth based on the market trends. Let me just go back. I think you've seen the chart on the right-hand slide. Our compound annual growth rate has been 11%, and we announced 12% or 13% order growth last quarter, which is in the first quarter of 2020, and 13% overall order growth, 12% organic growth, not counting any acquisitions, and 9% overall growth in revenue. So we're continuing to grow on a strong path. It's great that we're growing the top line, but growing the bottom line 11% is not what it's all about. There's so much more potential. So we're working at not only growing the top line, but expanding our margins. So we have focused on gross margin improvement. It's a company-wide initiative that we've had for a couple of years. And we started that, as you can see, first we focused mostly on growth to get the growth going. And then in 2018, we started focusing on margin expansion. And you can start to see some of the results. The first thing, moving the mix of our solutions from manufacturing solutions to more weighted on R&D solutions. We still make manufacturing solutions, and we're going to have great business there, and that's sometimes misunderstood. But we have more R&D solutions which have higher barriers to entry, have more software upgrades, and on top of it have higher average selling prices and higher overall gross margins. When we're first to market and there's no competition, we have pricing power. When you're second or third or fourth, you don't. You're in a price war with our competitors. So being first to market is another big part of our expanding margins. And the last thing, we not only want to expand our gross margins, we want to move right down the P&L and expand our G&A and expand our margins in our G&A, becoming more efficient. So as we have grown, we have done that. And we've put in place a lot of continuous improvement to do this. But you can see we've delivered a 670 basis point improvement in gross margin alone, and we're not close to done. It's nice to be able to grow the top line, to expand your margins, and to also have a very efficient G&A structure, but you also want a durable business model, one that could withstand bumps and hiccups in the marketplace. You can see from our balance sheet, we're prepared to do that, but more importantly, we're doing other things to make our business model more durable. First, we have a diversified set of businesses. Even though we're organized into two groups, there's at least 20 different sub-opportunities inside of those groups that we focus on. Not only do we have different businesses, we have a big, wide portfolio of over 7,000 products and solutions. We're increasing the amount of software that we sell relative to hardware. Software has very high gross margins, and again, we've grown our software business from about $360 million to over $800 million in this time frame. We have more than doubled our software efforts. That helps us also with recurring revenue. We do not realize all the revenue up front. That's why you see a discontinuity between orders and revenue. Some of the orders go in and they're actually realized in revenue over the course of an entire year when we sell subscription services. But we not only do that, we're focused on services, which has a lot of recurring revenue. On top of that, we have a flexible cost structure. I'll mention that a little bit later, where everybody has a component of variable pay. But take a look at our recurring revenue. We have so much more potential, but we've increased that from $472 million a year to $838 million. That provides more stability and more durability for all of our investors. When you do that, you also have to make sure that the organization can keep up with all this growth and all these changes. So we're doubling the number of frontline sellers with our new solutions that are not only first to market, but they're the highest performance and the best things that are out there. If you have a clogged sales channel, it's not good. So we are doubling our sales force. We announced this years ago. Mark is going to give an update on that, but we've increased our direct sales headcount by over 50% in the last few years. We've also increased the variability of our sales compensation. So people that are over are paid more. We basically changed our rate, so we're incenting people to perform more. People that go ahead and exceed get paid even more. People that are underperforming get paid even less. This is a motivation force for our sales force, and it's working very well. The other thing is we had to make sure the rest of our G&A organization is in place and they have the right type of values and they have the right type of skill level to perform and to perform with passion. So we've made 154 different leadership changes since we've started the company. And that's a lot in a company of our size. We've increased our software engineers, as I mentioned earlier, by 83%. And this over here has been providing the earnings per share growth that you see that's over 80% since we've started the company, and the increase in market cap, which is more than tripled. So you may ask, what are we going to do with all this cash now that we're making? Last year we made $872 million. Our capital allocation priorities have not changed. We know what to do with it. We're going to first invest in organic growth and provide the growth that is there in our key markets. And we're going to augment that where we need to fill some holes to fill out our strategy, as long as it meets our strategic intent and meets our financial commitments. And our financial commitments are ROIC based, and they have to exceed our WACC by a good margin. And by doing that, it provides great opportunities. If we can find opportunities to provide returns higher than our weighted average cost of capital, we're going to return the money to our shareholders. And right now, we have about $300 million on our share buyback authorization, actually over $300 million, and we'll utilize that as it makes sense. And again, if there's any other price discontinuity or anything else changed, I will meet with the other board members and we will take appropriate action. We have done 10 acquisitions since we've launched the company. 6 of them are ahead, 2 of them are on track, and 1 of them is delayed. And with Ixia, it took us longer to get that integrated into the company. There was more work that was necessary to bring the product quality up to the Keysight standard. That took more work to integrate the supply chain to realize the cost synergies, but now it is on a very good course. It's integrated in Satish's business unit, so we can provide end-to-end workflow solutions for the communication solutions market. And the last 2 quarters, it has delivered double-digit order growth. You're also going to hear today from Jay and also from Satish about Labber, a new acquisition that we've made to give us capability in quantum, which is one of our new growth initiatives. All of this sounds great, but you need to get 13,500 employees all aligned and all working in the same direction. And I really believe that our unique culture is a real competitive advantage. It's very results oriented. It has very high uncompromising integrity. The focus has been on speed and courage, and you will hear from Ingrid about some of the things that we've done there to accelerate our speed. Of course, continuous improvement has been part of our history. We have lean throughout the whole organization, as well as standard TQC type of programs. But it's not only important to talk this, but to reward the employees for delivering these results that are so important to the company. So everybody in the company has variable pay based on results. And some people have 93% variable pay based on what happens starting at the top, and it goes all the way down to about 15% in total. But there is a wide range, but everybody has a vested interest in delivering total shareholder return. What's also extremely important to us, and this is part of our culture, is CSR. And this is something that's been inbred from back in the DNA in the Hewlett-Packard days, but we have a vision to make sure that we have a business framework that provides ethical, environmental, and socially responsible operations. We have 3 key goals that you can see on the left. We're already ahead on 2. And we have a 6-stage plan that you see in the middle that goes from ethical governance, as you can see, all the way through to the environment. We've received some awards in this area, but it's a really important focus for us. And this is what helps us keep our employee retention. Our employees really believe this. And that's why you'll hear about where we have our attrition rate of roughly 6% on total for the company. And that includes regions where people are changing jobs in China and other areas where they change jobs more regularly. That's a pretty high rate of retention, and it's something that our employees really thrive on. We put all of this together and communicate with our employees with the Keysight leadership model. This is basically a common language to get everybody to understand what our goals are and in order to enable us to have the right type of conversations so we can go ahead and make sure that people are delivering on what the objectives of the company are. Right at the center is customer success. It doesn't say make a profit or be good to employees. Everybody is focused on making customers successful. Because if we can make customers successful, everything flows from that. We can generate the revenue. We know how to take that revenue and generate great operating margin, great cash flow, et cetera. But customer success is at the middle. By working with them, that gives us opportunities for market insight. Once we understand where to go, we have capital allocation, and capital allocation could be myself and Neil deciding to make $1 billion acquisition, or it could be 2 employees deciding whether or not they both need to go on a trip to visit a customer, or whether or not they could do it with one person if another person cross-trains. So capital or investment is basically controlled at multiple levels of a 13,000+ person organization. It's not just in the C-suite, and we embed this throughout the whole organization. We've talked about first to market, operational excellence, and employee growth. You'll hear more about this from Ingrid. That may sound pretty simple, the 6 steps that we've done to transform the company. There's a lot more. So in your handouts, it will show you a time sequence of the high-level steps, although there are a lot more. And the first slide you can see here that's in your book talks about 2014 to 2017, and then it ends on the next page showing the results that we delivered last fiscal year, which ended October 31st. But just a couple of points, triple-digit growth in 5G and exceeding our margin targets and everything else. But taking a look at total shareholder return is important. That's the goal and the thing that we have to make sure that we do on a continuous basis. And our fiscal year starts November 1st, ends October 31st. And we're, as you know, a member of the S&P 500. And now that we're a member of that, we were measured against that. And out of all 500 companies in last year, which ended in October, the last fiscal year, we were number 4 out of 500. We finished in the top 1% of the S&P 500. So this slide right here shows the combination of the results of what Keysight has delivered. 11% compound annual revenue growth, even though the first couple of years was transforming ourselves. We've increased gross margin 670 basis points. We've increased operating margin 590 basis points, increased our EPS 17% on a compound annual growth rate, as well as increasing our market cap. So our strategy is very sound. I showed this before. We're going to continue on this path, and this has decades of runway because there's perpetual change in our industry, and we can help go ahead and enable that for our customers. We are also using our culture as a competitive advantage, and I'm very glad to say that our employees are very engaged and very competent, and Ingrid will also share some more information on this. You're going to hear today about our growth initiatives, and you're going to hear in more detail, not only about what they are and what we've done, but where we're going. And on top of that, if you look at number 5, you see 6G and quantum, 2 new growth initiatives. And again, we invest early. People are just starting to roll out 5G. We're talking about things that will deliver in a decade from now. And all of these growth initiatives have a runway of at least a decade. So let's talk about what you can count on from a business model and what our expectations are and what we deliver. In 2015, we outlined our business model for revenue growth, operating margin, and EPS growth. In 2018, when we were here almost 2 years to the day, we said we achieved all of those and we increased our business model. In particular, we said we were going to increase our operating margin targets 400 basis points. And as you can see, we have exceeded that. And we achieved 46% earnings growth last year. You see the operating margin and the revenue growth, which were ahead of our targets. So I'm very glad to say that we are upping the measures on ourselves. We are increasing our own expectations and increasing our business model to deliver another 500 basis point improvement in operating margin above the model that we outlined in 2018. The sustainable growth, we've also increased that 50 basis points, and that's through any type of market. Sometimes it will be hotter, sometimes a little softer, but we're going to do everything we possibly can to make that greater than the marketplace every single year. And our EPS growth, even though we have a higher target, we're still going to deliver that 10% or greater EPS growth. Last quarter, for instance, in Q1 of 20, we delivered, continued to deliver on that path where we delivered EPS growth in the 30s. So you're going to get a chance to hear from the staff. I brought most of the staff with us today. 9 different presenters from the staff are going to present in their own areas of expertise and ownership, and I think you're going to find it hopefully very, very helpful. So in summary, I just want to point out a few things about the company. One, we have a very strong leadership team and an exceptional employee base that is delivering on their commitments. We're providing first-to-market solutions, and accordingly, we're taking share. And we're doing this in markets that are growing and constantly looking at markets that will grow at least a decade. We're moving into more complete solutions, which has software as well as hardware and services. And overall, this provides higher gross margins and more recurring revenue to stabilize earnings power on the bottom line. And we have a systematic process for doing this, which is the Keysight leadership model that puts everything together to help our employees understand the language and to make sure that they know our expectations, and we have very productive discussions. So in summary, I think you're going to find the opportunities we have in front of us are even greater than the ones we had over the past 5 years.